Hello friends, recently a friend of mine asked me a tax query. He asked me that his salary is increased now and he wants to save some taxes. And to save the taxes, he is thinking of paying rent to his mother so that he can save the taxes. And then he asked me how it can be done properly to save the tax. Then I asked him two questions. The first one was, I asked him why you are paying the rent to your mother and not to your dad. So he said that since his mother is a housewife, she does not have any source of income, whereas dad is under 30% tax bracket. So if I pay to a mother, I can, she need not pay income tax, and this way I can save some taxes. Second question I asked him, in whose name is the house property registered? He told me that it's in his dad's name. So then I told him, okay boss, now come, let's do some clubbing. So friends, you might be wondering what I'm doing this clubbing, dancing and all those things. So basically, Income Tax Act also has the clubbing sections. Okay, and it is not the DJ and the party clubbing, but income clubbing. Okay friends, which means in certain situations, income of one person will be clubbed, or that is included with the income of another person. And this rent paying to your mother when the house property is registered in your father's name is one of the situations of clubbing provisions of Income Tax Act. So let us see whether you can actually save taxes through this method or not. Okay friends, so let me just tell you now the whole situation in a brief manner. So there is house property in the name of the father, son is staying with the parents, and he is thinking of paying rent to the mother because she is a housewife, so that he can save taxes by paying rent to the mother. Okay, so this is the broad outline. Now actually friends, you can pay rent to your parents legally, it is allowed, there is nothing wrong, you can pay rent to them. But in this case, what is happening is the person, my friend, was actually paying rent to his mother, but house property is not in mother's name but is in father's name. That is the big problem here. Okay, so if you see, as per section 60 of the Income Tax Act, which talks about the clubbing provisions, that is transfer of income without transfer of asset. If you see, what does it tell is that if any person transfers the income from any asset without transferring the asset itself, such income is to be included in the total income of the transferor. Okay, so I don't know whether it went Greek and Latin for you, but let me now explain this section in a simple manner to you. If any person, here any person is the father, okay, transfers the income here is the rental income which the son is paying to the mother, right? From any asset is the house property. So if any person transfers the income from any asset, so father is transferring the rental income from the house property to the mother without transferring the asset itself. The house property is not transferred in mother's name, only the income is transferred to the mother's name. Then such income, that is the rent, will be included in the total income of the transferor. That is the father here. Okay friends, this is what clubbing provisions. So if you are paying rent to your mother when the house is in name of your father, then you cannot save taxes. I repeat, you cannot save taxes legally, because this rental income has to be clubbed or included in the income of your father while filing the income tax returns, friends. Okay, so it will be considered as the income of your father, okay, and rather than adding as an income of your mother. Okay, so it is income of your father. And the income tax department is also very smart, and more smart than you think, friends. They know that all these tricks people will be doing it, and hence this clubbing provisions is there in the Income Tax Act. But legally also, logically also, you think, friends, when the house is in the name of the father, how can the income alone be taken to the mother? This is hence it's a very valid section. Okay, so the bottom line is, even if you're paying rent to your mother, house is in father's name, you cannot save any taxes. This income is to be included in the income of your father while filing income tax returns. So now let us see what in actual reality people do, in the real life situations. If you see, people in their, offices, that is the employer, give the PAN of their mother, okay, to the company, and then, the company does not check whether this PAN belongs to your mother, whether the house property belongs to mother or father. Company is not bothered about that, and they deduct, and it is linked to the income tax website that this person with this PAN, that is of your mother, is receiving some rent, and they file income tax returns of the mother, if it exceeds the threshold limit of 2.5 lakhs. Okay, friends, but it is not right. You have to actually file with the income of your father. Okay. So my friend asked me, how will the income tax department come to know that this house property is not of my mother and it is actually of my father? How will the income tax department come to know? Very valid question. But what actually, income tax department can do is, and they do this a lot of times, but so there are different scenarios. The first scenario, if you see, friends, is that income tax department generally, friends, does not go behind individual returns unless and until there is some gross negligence in the income tax returns. That is, you have shown rent, expend HRA, linking your mother's PAN. But in mother's income tax return, you have not shown the rental income from house property. Have not shown at all. So there is a gross mismatch. In that case, they will know. But general income tax department, if it is shown, they will generally not probe, because how much of you will be paying HRA, friends? 20,000-25,000 per month as a rental income to your mother, which around comes to 2.5 to 3 lakhs. So income tax department goes mainly after corporates, because if you attack one corporate, you can get crores of tax money. But whereas if you attack one individual, 3 lakhs on that 30% also 10, you will get 25-30,000. So the time and efforts is not worth the rewards which you go after individuals, then you go after corporates, and hence income tax department, it does not go for after every individual, it goes after randomly some sample basis. Okay, but if it is directly in mismatching, then it will go computerized, automatic intimation you will get. But it goes after mainly corporate. That is one thing. Second scenario, friends, is that suppose in future you sell your house, then the capital gains has to be shown in the father's ITR. And after that, your mother will stop getting the rental income. Then income tax department can send an intimation to you that why your rental income has stopped. They may or may not. Generally they won't, but they can. They have the possibility to ask why it is not reported. Okay, so that is one possibility. If your answer is genuine that it is self-occupied, then you can say. But if it is not and you get a notice, it is very rare chance, based on the sampling. If you get, then you are caught. Third is that suddenly if your mom gets a rental income, you're 26, 27, you get salary hike and then you pay rental income to her. Income tax department can suddenly ask, last so many years, 15, 20 years, 20, 25 years, you have not filed income tax return. Suddenly now you are filing. How is the source of purchasing? So what is the source of purchasing this house property? From where did you get the money? Again, this is again a probability. They will not ask for every other person. But if you get caught in that sampling of 2 to 3%, then you might get a notice. Fourth situation is that, friends, today you might be going scot-free, not get caught, but in future 4 or 5 years down the line, you don't know what happens, right? Today Aadhaar is getting linked with every other financial transaction. Government is tracking whether you're going for overseas, how many visas, foreign tourists, house property, annual information system, tax information system, everything is getting linked with Aadhaar. Even electricity bills of the houses are getting linked with Aadhaar. So in future, somewhere if there is some wrong link, wrong references, one is linked with your father, one is linked with your mother, then you are caught. And if you're caught in the future, then you will have to pay interest, tax plus interest plus penalty. Interest will be huge, 1 to 1.5% per month. So it can go to 12 to 18% per annum for last 3 to 4 years. You can imagine how much of tax bill it is. So this is what, friends, practically it can happen. So legally, if you're paying rent to your mother, house is in father's name, you cannot save taxes. You have to add that income with the income of your mother. So I hope you got this clarity. Thanks for watching Combrella. Until then, see you next time. Thank you. C.S. Karthik signing off.